Alright guys, welcome back to the channel. Now I've been umming and ahhing about this for quite a while now because I have a trading strategy that I've used for many years. It's a trend continuation strategy and it's named the Graystone Trend Continuation Strategy, and I teach this strategy to our students inside Tier 1, and our students have been staggered with the results, and some of them are trading it very profitably. Some are still demo trading it and are absolutely dumbfounded at the results. It's an extremely versatile system. It can be traded across all time frames, and it's from aggressive to conservative, and there's 3 different ways of attacking the trend, which not many people show you. Most people show you one way. This is 3 different ways in one strategy to attack the trend. So what I've decided to do is over the next series of 5 lessons, I'm going to be teaching you exactly the ins and outs of this strategy. Okay, so the first lesson I'm going to be talking about the concept and the principles behind the strategy, the thought process behind the strategy, and then in the next lesson I'm going to be talking about the first entry. The lesson after that I'm going to be talking about the second entry, and the lesson after that I'm going to be talking about what I call the last chance entry, and then finally I'm going to give you some discretionary notes on what I've found, how I personally trade it, how some of our students, what they have in mind when they trade it, and I'm going to give you everything over the series of this video. Now, I must say that before you watch this video, it will help if you understand multi-time frame analysis. Okay, in other words, being able to form a bias on a higher time frame, looking at a trading time frame for your setup, and then using lower time frames for execution. If you don't know that, you can go and search all the videos on this channel to find many videos about that. But in this video I'm going to be talking about the principles and the thought process behind the strategy. So get a pen and paper and let's get stuck in.
Right, so in this lesson we're going to be going over the Graystone Trend Continuation method, and this is a strategy that I use for trend continuation setups, and I'm going to be going through the rules of how you would look to get involved, different entry techniques, and how you can really capitalize using multiple targets. So let's get stuck in. So the first thing we're doing is looking for a trend. So if you haven't already watch the modules and lessons on how to identify a trend, then I suggest you go and watch that before carrying on with this video. But once we've identified the trend, we're looking for a pullback, and then we're looking to sell the high. Okay, so what we're looking for is, once we've identified a new structure low, we're waiting to see if price action will start to pull back up into what we call this kill zone here. And the initial kill zone I define by the previous structure low. Okay, so the low, the wick, the low of the candle to the high of the previous outside return. So this point here will be the high of the highest candle, and this point here will be the low of the lowest candle. Alright, so once price action pulls into this kill zone, I'm essentially looking at 3 different areas to involve myself in selling this short. So the first entry we're going to be looking at is the first opportunity, which is a retest of this previous structure low. So as I said before, we're looking at the lowest low, the low of the lowest candle here, and we can draw in our horizontal line to wait to see if price action can push up and test that level. What I can do once price action has tested this level, what I can do is drop down to my lower trading time frame and see if we can get a retest of structure as an entry technique. So what I'd be looking for is a double top at that level, looking for a valid double top. So if this is the 60-minute time frame, I can drop down to the 15-minute, and what I'd be looking for is a double top at that level once price action's tested that previous structure low. If we get a double top at that level, instead of placing stops above this high, my stops instead go above the double top, an ATR above the high of the double top, and then I'm looking to take targets for a retest of the low. So you can see it's a very nice risk reward. I'd be using an ATR based stop on the 15-minute time frame above the high and targets at a retest of the low. So just to recap on this, as soon as price action pushes up and tests the previous low on the trading time frame, I can drop down to my lower time frame and look for a double top or retest of structure of that level. Okay, and then once price action has put in a valid double top, then I can enter next bar market on the using the lower time frame as my entry technique, and then place an ATR based stop above the high, and then look to shoot for a retest of the lows for targets. Now this will be my first chance entry. There is a chance that I can get stopped out, and that doesn't mean that I'll stop looking for opportunities. It just means that I have to look for my second chance entry, which I'm going to go through now. Just before we do move on to that, I just want to clarify the rules around where we look for this retest of structure, because I've told you that we're looking for the previous low or the low of the previous low, but there could be some subjectivity around where you define that low, because what we don't want to do is start looking for a retest of structure anywhere in this zone. There has to be a defined place where we're looking for the retest of structure, and if it doesn't form in that zone, then we stop looking for that retest of structure. So I'm going to define quickly, before we move on, what this zone looks like. So as you can see, I've just drawn lines here, so it doesn't really represent a candle. But what this section here will look like in real time will be like this. So as we're pushing down, we'll get a candle that forms at the low of this level. Okay, before the market starts to push back up. Okay, so we've now got the low of our candle. Now this line here, what this represents in real time is the low of this candle. So we're looking for the retest of structure between here and here. So as we then put in that lower low, lower close, as we push back up, we're looking for this retest of structure here to form anywhere in this zone. If it forms anywhere outside of this zone, then it's not valid. As long as it touches this zone, it can form here, it can form here, but as long as it touches the zone that we're looking for, it's valid. If it forms anywhere outside of this zone, for instance up here, then this is no longer a retest of structure that I would use to enter the trade. And this will make more sense when we go into the practical applications, but I just wanted to define what this zone actually was, because we don't want any subjectivity when we're looking at where we're looking for this retest of structure. So let's get on to the second chance entry now. Alright, the second chance entry is going to be in the broader kill zone. So the initial kill zone is going to be from the previous outside return high to the previous low down here. And again, the low of the candle. What I'm going to be looking for is a lower low, lower close candle. But before I look for the lower low, lower close candle, what I need to do is ensure that this kill zone here meets my maximum risk limit. So the first thing I'm going to do is work out where my stop loss needs to go. And my stop loss is going to be placed at the average true range level above this previous high. So say for instance the ATR is 10 pips. I'm going to be going 10 pips above this high, which is going to put me up at this level here. And once I know where my stop loss needs to go, what I can do is work out where I get that minimum 1-to-1 risk reward, because I always want a minimum of a 1-to-1 risk reward if I'm shooting for a retest of these lows. So I know where my target's going to go. I know where my stop loss is going to go. So now I need to work out where is the lowest point that I can enter on this pullback that's going to give me a 1-to-1 risk reward. Now very quickly we can take our fib retracement tool, go from the target zone to the stop loss zone, and then we can quickly identify that 50% retracement level, delete that off, and then we're adjusting our kill zone to suit. You can see that I just narrowed up the kill zone there, because if I entered this low I wouldn't get a 1-to-1 risk reward. So we now know that if we enter no lower than 1.2084, we're going to have more than a 1-to-1 risk reward. Okay, so once price action pushes into this kill zone, now we're looking for our entry technique. And what I'm going to be looking for is a lower low, lower close candle. Alright, so as we push into this zone, we're going to be looking for a candle that has a lower low and a lower close than the previous candle low. So if we pretend that these candles are printing on the chart, what I'm looking for is a break and close below the previous low. Okay, so something like this, which would give me my entry. I would be entering next bar market on this candle because we've had a lower low, lower close than the previous candle low. Once we get this candle formation, I enter next bar market and then I'm in the trade. Normally better than a 1-to-1 risk reward, as you can see in this example. I'm looking for targets at a retest of the low, and I'm going to define targets when we go into the practical application, as well as other filters that you might want to pay attention to when you're looking for this trade entry. Alright, the third and final entry into this move is following on from the previous technique, except what we're doing is we're identifying a violation of this high, not a break and close above, but a violation. So say for instance we're pushing up and we haven't had our lower low, lower close candle yet, and what the market does is it pushes up and spikes up above this previous high. Okay, hasn't broken closed above it, so it's not an invalid trend continuation trade, but we've had a spike above, which means that we're no longer going to enter on a lower low, lower close candle. And the reason being is because we've had a higher high here than the previous high. So if our stop loss was going to be an ATR above the previous high, and we've now got a new high, it's not something I can really rely on. So what I'm looking for is a push up into this zone. Soon as we haven't had our lower low, lower close candle, instead we've spiked up and violated the previous high. So what I look for at this point is similarly to the first technique, where I can go down to my lower time frame and look for a valid retest of structure at this level. As soon as we test this previous high but don't violate it, I'm looking down on the lower time frames, and then I'm going to look for that retest of structure, just like we did on the initial technique down at this previous low down here. Okay, and again, even on the 15-minute, if we're going from the 60 down to the 15-minute charts, or the lower time frame, whatever that is, we won't be able, it will have to be a valid double top. So we won't, if this violates, breaks and closes above the previous high on the lower time frame, it's invalid. It still has to be a valid double top on the lower time frame. And if we get a valid double top, then I'm entering next bar market, and then we're shooting for a retest of the lows. Alright, so those are the three techniques that I use for this particular trend continuation strategy. And in the next video, we're going to be going over some real applications. We're going to apply this to the live markets, and I'll give you some examples of how each of these are used in the markets. If you do have any questions on this so far, feel free to ask questions.
Alright, so that's part one of the series, guys. There's 4 more parts to come. If you got value from this, make sure you subscribe, share this around as well for anyone who's looking to learn to trade. As I say, I'm going to give you the complete comprehensive rules behind this strategy and all the discretionary notes that have taken me years to refine. I trade it very, very profitably, and I hope you got value from this one. Stay tuned for the next one, where I'm going to be talking about the first chance entry. So I'll see you then.